The Dow takes a dive on dollar woes as the dollar hits a 20-month low against the euro. The blue chip index drops 158 points and the NASDAQ composite loses 54. The greenbacks dive and Wall Street's reaction coming up.
Walmart also weighed on Wall Street. The Dow Components shares drop over $1 on word the giant retailer will post its first monthly sales decline in over a decade.
After spending the weekend at the malls, shoppers head back to work and onto the net searching for deals. It's a phenomenon known as Cyber Monday.
Then you've heard of micromanagement. How about microbe management? We look at a company using algae microbes to clean up pollution.
I'm Paul Kangas.
And I'm Susie Garup. This is Nightly Business Report for Monday, November 27th.
Nightly Business Report is made possible by
Your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. A sharp sell-off on Wall Street today as oil prices rose, the dollar fell, and Walmart sales disappointed. On the first full trading day since the Thanksgiving holiday, the Dow tumbled 158 points and the NASDAQ dropped 54 points, or more than 2%. Leading today's concerns, the U.S. dollar, which fell to a 20-month low against the euro. Darren Gersh reports on what's behind the weakness in the greenback.
While Americans were busy shopping over the last few days, currency traders were also looking for a good deal, and they were not finding one in the U.S. dollar.
Institutional investors are indeed shopping around, looking at what the next play is to make money in the currency markets. In other words, the dollar has ridden its course in terms of strengthening. Now that the Fed is done raising rates, the markets are looking for other currencies, other options that can yield better returns.
Earlier today, it cost almost $1.32 to buy 1 euro. That's a 20-month high for the euro against the dollar, although the greenback recovered some ground by the afternoon close. For the year, the euro is up almost 11% against the dollar, and there's every reason to believe the dollar's decline will continue. The U.S. economy is cooling while growth in Europe is strong. Interest rates here may head down, while interest rates in the Eurozone are likely to rise, making the euro what analyst Ashraf Laidi calls the anti-dollar.
This doesn't mean that the central banks of the world are going to do outright selling of the U.S. dollar, because if they do that, then their existing dollar holdings will lose value. What they're to do is their future moves, they're going to consider holding euros, sterling, and gold.
And that's basically what the vice governor of the People's Bank of China said on Thanksgiving, warning Asian central banks faced increased depreciating risk for their dollar reserves. So far this year, the yuan has gained 3% against the dollar and 5.5% since the Chinese adopted a more flexible exchange rate in July 2005. But critics say the yuan is still 25 to 35% undervalued against the dollar.
We're all trying to get the Chinese to manage an increase in the value of their currency so that we can rectify the imbalances that are in the global economy.
Which is why Treasury Secretary Henry Paulson and Fed Chairman Ben Bernanke are heading to China next month. It was easier for the Bush administration to push for a stronger yuan when the dollar was strong. Now, with the greenback weakening, Paulson will have to tread more carefully. Analysts caution too sharp an adjustment in currency markets could undermine confidence in U.S. financial assets. Darren Gersh, Nightly Business Report, Washington.
One big contributor to the slide in the Dow, shares of Walmart fell almost 3% today on concerns about weak sales for November. The giant retailer says sales fell 0.1% last month. It's the first time in more than 10 years that Walmart's monthly sales have fallen. Some analysts say they're wondering why sales aren't improving, considering gasoline prices have fallen in recent weeks. Also discouraging, Walmart does not seem to be getting a big lift from its $4 generic drugs program, which was rolled out today to all its pharmacies nationwide. Well, one segment of the retail sector that's expected to do well this season, internet retailing. The Monday after Thanksgiving, known as Cyber Monday, is one of the busier online shopping days as Americans return to work and log on to employers' high-speed internet connections. Suzanne Pratt takes a look at the prospects for cyber shopping this holiday season.
'Tis the season to let your fingers do the shopping, and a growing number of Americans are doing just that. Cyber Monday may be the official start of the online shopping season, but online retailers have been courting shoppers for weeks with big promotions. It's all part of a push to draw more shoppers to websites and interest them in spending big dollars online. Experts say it's working.
Not really anything consumers won't buy online. In fact, they'll buy their milk online, and they'll buy a $10,000 ring online, and an HD TV and a Christmas tree online.
Jupiter Research predicts U.S. online holiday sales will reach $32 billion this year, an 18% jump over sales in the same period last year. That's nearly 3 times what Americans spent online 5 years ago. Experts credit convenience and value, free shipping in particular, for the aggressive growth in online sales. Jupiter also says much of this year's growth in sales will come from existing web shoppers with bigger budgets. Average online holiday spending per buyer is expected to increase to $281 in 2006, up from $251 last year.
There are less and less people to come online who have never purchased before, so that as a driver of increase of sales is diminishing over time and being made up by per buyer spending.
Overall, internet sales make up only 5% of total retail sales in the U.S. year-round. But analysts are forecasting robust growth in online shopping in the coming years.
We look for online retailing, at least in the U.S., to grow about 20% a year over the next couple of years. We think that's largely going to be driven, interestingly, by brick-and-mortar retailers that are increasingly focusing their attention and their investment online.
Even though Cyber Monday gets a lot of media attention, it's not the busiest online shopping day. Last year, that honor came on December 12th. This year, analysts say it's likely to happen even later as retailers extend the deadline for free shipping. Suzanne Pratt, Nightly Business Report, New York.
Stocks on Wall Street sold off sharply this morning as the weak dollar, Walmart's disappointing November sales, and higher oil futures gave investors an excuse to take some profits on the market's recent run-up. By noon, the Dow tumbled 136 points. NASDAQ was off a hefty 44 points. The plunge activated many stop-loss orders, which kept the selling pressures on this afternoon, so the market ended at its lowest level of the day. Dow Industrial Average closed off 158.46 points, putting it at 12,121.71. The NASDAQ Composite tumbled 54.34, ending at 2405.92. Standard & Poor's 500 index down 19.05 at 1381.90. Over in the bond market, the 10-year note rose 7/32 to par and 23/32, putting the yield at 4.53%.
For more analysis now on today's market sell-off, we're joined by Tobias Lefkowitz, Chief U.S. Strategist at Citigroup. Hi, Tobias.
Hi, Susie.
As you know, investors have a lot of worries on their worry list. They're worried about the economy, they're worried about housing, high oil prices, and now the dollar. How worried should they be that a decline in the dollar will be bad for the markets?
It's not really that big a deal. I mean, think of it in these terms. In 1985 through 87, the dollar plunged significantly more than anyone's looking for right now, and the markets actually rallied pretty strongly. On the other hand, from 1997 through 2000, the dollar was strong, as was the stock market, and more interestingly, the dollar was very strong from 2000 through 2002, didn't protect anyone from the big sell-off.
So what's your outlook for the markets between now and the end of the year and the beginning of 2007?
Well, we're looking for the S&P 500 to close at 1,400, which is pretty much where we were as of Friday's close. So I think we'll recoup what we've lost today over the course of the next month. But to a great extent, we still see move to 1,500 by the end of next year. We could have a little bit of a rough spot early next year as investors kind of deal with a slowdown in what has been very powerful earnings growth to something a little bit more moderate. And we suspect there'll be concerns even on the housing market as we move into the spring.
So have we seen the highs for the Dow and the NASDAQ for 2006?
We suspect so. I mean, it's hard to definitively say that if something changes on December 30th versus what happens on January 2nd. But generally speaking, we had hit pretty much our targets a couple of days ago.
Some people say that these high prices that we've seen in stocks recently have resulted in an overvalued market. What's your view on all of that?
We think that's false. If we look at where the market multiples are relative to interest rates, relative to equity risk premiums, they're very attractive. And one of our measures, we're sitting at a level that we've seen about 85 times before in the past 45 years. And in every single one of those instances, the market was up a year later. So we definitely disagree with that view that the market's overvalued by any stretch. There are certain areas of the market that can be a little bit stretched at times, but overall, it looks pretty good, particularly in the large cap areas.
Has today's sell-off in any way caused you to begin to rethink your strategy?
Now, when we look at the data, sentiment is still pretty skeptical. We can look at just the money flows into domestic equity mutual funds. They've been outflows for 5 months straight, ending in September. Last time we had 5 months straight, or 5 months in a row of outflows, was back in October 2002, and that was the bottom of the market. We see earnings expectations pretty much being cautious as we go forward, and they've been cautious for the past 12 quarters, which has led to earnings upside surprises. And again, as I indicated before, valuation looks pretty good. Clearly, some people got spooked by a large retailer's numbers, but on the other hand, the rest of the retailing area was very strong, with, I think, the National Association of Realtors talking about 19% gains over the holiday weekend.
Okay. Tomorrow, Federal Reserve Chairman Ben Bernanke is going to make his first speech in months. What do you think the markets need to hear from Ben Bernanke?
I think they're going to want to continue to hear that the inflation is going to moderate, that the economy is still on firm footing but not excessively strong. And I think this is the key issue. Everybody keeps talking about this concept called the Goldilocks economy as if it were a fairy tale. We've had this quote-unquote Goldilocks economy for about 40 quarters in a row. I mean, when does it stop becoming a fairy tale and become something very real?
All right. Tobias, thank you very much for coming on the program. We really appreciate it.
You're very welcome.
We've been speaking with Tobias Lefkowitz, Chief U.S. Strategist at Citigroup.
Ford Motor has secured $18 billion in financing to help pay for its North American turnaround. Ford says that the additional liquidity will shore up its cash position and act as a cushion against any recession. For the first time in the struggling automaker's 103-year history, Ford's core auto assets are being used as collateral on the loans.
A big win for Big Tobacco today. The U.S. Supreme Court refused to review a lower court decision throwing out a $10 billion judgment against Philip Morris USA. That judgment originally came in 2003 in a lawsuit accusing Philip Morris of fraud by knowing its light cigarettes were no safer than regular ones. That decision was overturned last year, then appealed to the U.S. Supreme Court, which today refused to reconsider it. But there's another case against the company that's still pending at the High Court. Paul.
Well, shares of Altria, the parent of Philip Morris, fell 33 cents, Susie, closing at $83.42. Now let's look at the rest of our stocks in the news tonight. Most active New York exchange issue on 17.4 million shares. Lucent Technologies losing 6 cents. Alcatel's takeover of the firm is slated for completion later this week. Pfizer, one of only 3 gainers in the Dow 30, edging up 8 cents. Time Warner, 22-cent loss. AT&T was one of those 3 Dow gainers, but gained only a penny. And then Ford Motor down 36 cents. You just heard about the $18 billion financing. Walmart stores off $1.29. You heard the bad news about November sales. And let's have a look at some other big Dow losers. American Express, Boeing, IBM, and United Tech all off $1 or more. Very weak I should say blue chip sector. GE down 24 cents. ExxonMobil was the third of the three gainers in the Dow, moving up 9 cents. Quest Communications down 19 cents. EMC a loss of 24 cents. A website called Red Herring mentions EMC as a possible takeover target of private equity firms. Nothing specific. Home Depot lost 13 cents, although Bank of America repeated a buy and boosted its price target from $42 to $45 a share, and also upgraded Lowe's by the same upgrade. Lowe's stock was up 40 cents at $30.40. The airline stocks particularly well. No happy landings there today. Alaska, AMR, Continental United, and U.S. Air all down on that rise in oil prices by about $1 a barrel. United States Steel fell $3.14. Soleil Securities downgraded it from buy to a hold. And the major hotel stocks weak, off $1.70. A.G. Edwards downgraded Hilton from buy to hold. Did the same for Starwood, which fell $1.92. R.H. Donnelley on the upside by 27 cents. Deutsche Securities upgraded it from hold to buy and has a $72 a share target for the stock. J. Crew Group. Last week it ran up sharply on third quarter earnings turnaround, but today CIBC World Markets Brokerage downgraded it from sector outperform to just sector perform. NASDAQ's most active, Google, down $20.25. This week's Barron's Financial notes investors seem to be ignoring Google's slowing growth rate and also its high price-earnings ratio, a 37 multiple. Apple Computer coming off of record highs last week, down $2.09. And then Microsoft, 28-cent loss. Cisco fell $1.04. Intel, 57-cent loss there, fifth in dollar volume. Research in Motion down $6.26. Oracle fell 68 cents. Dell was down 32 cents. That Red Herring website mentions Dell as a possible takeover candidate of private equity firms. Qualcomm off $1.13, and Yahoo lost 76 cents, 10th in dollar volume. XM Satellite Radio off 83 cents. Bank of America noted that sales of the company's radios are expected to fall about 20% this year. And then Trubion Pharmaceuticals up $1.06, one of the few gainers we see on NASDAQ here. That stock just went public October 17th at 13, and today Bank of America started covering it with a buy recommendation and a $23 a share target. And over in the American exchange, Amcon distributes consumer products, a real turnaround in the third quarter, 41 cents in earnings versus a loss of 32 cents a year ago. And those are the stocks in the news tonight. Susie?
Paul, as Americans and American businesses become more concerned about the environment, new ways are surfacing to tackle problems like pollution. In New England, one company is taking an unusual approach to cutting emissions from power plants, and it's using a totally different kind of plant to do it. From Cambridge, Massachusetts, here's reporter Mont Fennell.
Every year in the U.S., power plants spew out more than 2 billion tons of polluting carbon dioxide.
It's mind-boggling. It's a lot.
But a Cambridge, Massachusetts company hopes to combat the problem with algae. You know, that green stuff that grows in ponds and on the sides of your fish tank.
Algae can be used to make paper, plastics, and pharmaceuticals. You can actually drink algae, like this health food product called Superfood. It's not bad.
At every board meeting, we have a tradition of toasting using algae drink.
Green Fuel Technologies has developed a system which pumps algae and smokestack emissions through a series of tubes. When exposed to sunlight, the algae, which are nature's fastest growing plants, eat the polluting gases, just like trees absorb carbon dioxide.
This is a way to turn an enemy to a friend.
The result is either a dried powder, which the power plant can burn instead of coal, or a liquid, which could be sold for a profit to make ethanol or biodiesel. Those are less polluting fuel alternatives for autos.
So you can drive with a clean conscience and with a clean exhaust gas as well.
Green Fuel says its system reduces poisonous nitrous oxide by up to 86%, that it cuts carbon dioxide, which many scientists believe contributes to global warming, by up to 40%.
It's a very powerful technology, and when you use algae, you can use any water quality, you can use arid land, then it's even more exciting.
Massachusetts venture capital firm Polaris Ventures recently invested nearly $7 million. That's on top of $13 million Green Fuel had already raised.
Bob Metcalf, he's a very perceptive investor. He's invested in a lot of companies that have done well.
The payback could be huge. This power plant in the Southwest is the company's first customer, now testing if the system will be cost-effective. If it installed the algae bioreactors over thousands of acres, they could, in 1 year, produce double the amount of biodiesel fuel currently used throughout the nation. There are 1,700 similar plants.
If we outfit every eligible plant in the United States today, it reduces our oil imports by roughly the quantity of Saudi Arabia, Venezuela, and a couple of more countries.
Still, green fuel faces challenges, like how to ensure it would cost less to build and operate the algae units than the cost of the fuel they produce.
But we believe that we have a team that's strong enough to deal with all the challenges and to find the right solutions.
Execs are negotiating with nearly 24 electrical generators worldwide, companies which could make hard green cash out of slimy green algae. Mont Fennell Nightly Business Report, Cambridge, Massachusetts.
Tomorrow, finding new ways to power the nation. We begin a special series on alternative energy called Power Struggle.
Here's a look now at what's happening tomorrow. Federal Reserve Chairman Ben Bernanke speaks in New York City. Also tomorrow, October durable goods, existing home sales, and the Conference Board's November Consumer Confidence Index. Tonight's commentator sees positive signs ahead for the U.S. economy. He's Bernard Baumol, director of the Economic Outlook Group.
With the new year just weeks away, what can we expect of the economy in 2007? Some forecasters warn the pullback in housing will either drag the economy into recession or condemn it to a feeble 2% growth rate next year. But some new reports suggest we could see a more vibrant economy, one growing at a lively 3 to 4% pace. What will fuel this activity? First, the seeds of a housing recovery are moving into place. With mortgage rates the lowest since January, home affordability is rising. Builders report seeing serious buyers again. In fact, sales of new homes have turned up the last few months, and the inventory of unsold houses has been falling. There are more promising signs. Unemployment is at multi-year lows, and real wages are rising at the fastest pace in nearly a decade. In addition, household wealth keeps climbing. The stock market has enriched investors by $2.7 trillion this year, which more than offsets the $750 billion in losses from falling home values. All these factors should propel growth in the months ahead. This leaves us with one big concern: inflation. The combination of a stronger economy and fewer available workers could lead to excessive wage inflation, and that is enemy number one at the Federal Reserve. So while the economy is set to stage a comeback in 2007, the price will probably be higher interest rates later in the year. I'm Bernard Baumol.
Recapping today's market action, the Dow takes a dive on concerns about the dollar. The blue chips lose 158 points. NASDAQ falls 54. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org.
And finally tonight, the 12 days of Christmas are going to cost you more this year. PNC Wealth Management calculated the cost of the items from the song, The 12 Days of Christmas, and this year they're up 3% to almost $19,000. A big jump in pear tree prices led to a 44% increase in the cost of a partridge in a pear tree. Also rising, the price of 4 calling birds. But turtle doves and French hens were unchanged. Prices for golden rings, geese a-laying, swans a-swimming, and maids a-milking held steady. But rising skilled labor costs meant a 4% jump in salaries for 9 ladies dancing and 3% raises for the lords a-leaping, pipers piping, and drummers drumming. And Paul, you won't save any money by buying these items online because don't forget, you have to pay for the shipping costs.
At these prices, we're going to have to cut it back to the 10 days of Christmas.
That's Nightly Business Report for Monday, November 27th. I'm Susie Garoff. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Stay with OPB. The News Hour with Jim Lehrer is next.